Hi, Jonathan York by Financial Partners, looking at investment markets. Certainly the US market got a pretty good big boost from the latest jobs report. That came in at 850,000 jobs created versus an estimate of just over 700,000. But maybe what was a little bit disappointing was that the unemployment rate actually increased. That was up to 5.9 versus 5.6. But clearly, it does show that as the US economy is gradually reopening, there are more jobs being created, people coming back into the workforce, and that's maybe a reason why the unemployment rate went up a little bit, that more people are now actually actively looking for jobs. Now, certainly COVID isn't defeated in the US, and what will be very interesting now over the next sort of couple of weeks is to see how many new cases come forward after the big July the 4th holidays. But certainly at the moment, the US looks in a pretty good shape. Certainly corporate earnings are pretty good. And like I say, the economy is pushing on. You're gradually seeing people coming back into the workforce. And so far, inflation really isn't causing too much of an issue, as most economists and analysts view that it will be transitory and will nowhere near be the same levels it is currently in the next sort of 6 to 9 months. Obviously, on the back of that renewed optimism, oil is trading pretty well above $70. And it's just going to be interesting now to see what OPEC does in terms of the supply side, because certainly they have plenty of supply on tap that they can sort of release to the market. In the UK, on Freedom Day, July the 19th, is now getting ever closer. But really, the issue in the UK is that you've seen an increase in cases really on the back of this Delta variant. And potentially you could see up to around 50,000 new cases a day. But Boris Johnson is adamant that the economy will fully reopen on July the 19th, and that really just sets the country up for some further issues going forward with COVID. Because despite what he says that he's nowhere near a sort of back to party days, many people will view that on July the 19th there will be mass parties, mass gatherings, and really if people have got COVID they will still be going to them, they won't be self-isolating, and that could present certainly some major issues for the UK government. Especially having worked so hard to get to this stage now. Whereas Europe seems to have adopted a slightly more sort of conservative approach and is gradually reopening, and certainly in the case of Europe at present don't seem to be anywhere near as big as the UK. Now, closer to home and in Australia, Sydney, really some major issues still with non-compliance with the lockdown. New cases are coming forward every day, and while many of them are linked to the initial sort of cluster, there are several that are coming out as sort of new clusters, if you like, where people have sort of got together with parties. There was one party that was sort of convened a couple of hours after lockdown was supposed to kick into place. And all of those people at that party have now got COVID. So certainly New South Wales is facing some pretty tough times. The rest of Australia is not quite as bad. Queensland sort of come out of lockdown, and so the rest of the states are sort of managing to contain things. So it just seems to be New South Wales and Sydney in particular, where a very small minority seem to be ruining it for the majority. Because again, if New South Wales can come out of lockdown, the Australian economy does look in pretty good shape. You've got pretty robust demand out there, pretty good pent-up demand that is waiting to be spent, and obviously all being buoyed as well by sort of a rampant sort of commodities market, especially with iron ore. Here in New Zealand, the government managed to avoid the embarrassing situation of running out of the vaccine. Pfizer came through a couple of days early, but again, there's still a lot of criticism about the vaccine rollout. And it's interesting to see how the wording is now changed to the fact that everyone will have the opportunity to be vaccinated by year end, whereas a couple of months ago it was that everyone will be vaccinated by year end. That certainly appears to imply the government has a little bit of wriggle room and will try and sort of spin its way out when come December everyone is not vaccinated. Because certainly the experts say, really, if you want to reopen the borders, then you really have to get everyone vaccinated. And certainly the tourism industry and New Zealand economy really does need those borders to be open and tourists coming back into New Zealand spending money. Now, certainly in the next couple of weeks, you should be getting your government contributions into your KiwiSaver. So it's worthwhile just checking to make sure those go through. Still pretty tough out there in that low interest rate environment. Kiwi Property have got a bond in the marketplace, 7 years, minimum rate 2.85. Now, if you are interested in looking at what alternatives are available out there, if you're seeking income, there are plenty of alternatives. And go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. And we look forward to speaking to you soon.